With China's economy slowing down, analysts believe its 2013 growth could slip to as low as 7%. And healthy economic growth still looks like a distant prospect for the Eurozone. The African Development Bank is worried on how the Western and Asian markets will affect Africa as they are pool of oil and minerals.
Africa cannot be an island in the world. With the slowdown in the large emerging markets, with the continued marasm in the Eurozone, clearly some of the African countries, especially the more open ones like South Africa, are affected. However, as I speak with you now, 14 countries will be growing at 7% and above. An additional, perhaps 15 countries or so, above 5%. We have only 5 countries, including those you mentioned, which are growing at the below population increase. So up to now, the threat has not materialized. We're watching carefully, especially the slowdown in demand for commodities.
Financial aid to Africa from the developed world has been cut off for the first time in 10 years. Thus, the continent needs to look for other ways to fund itself.
Unless you can close quickly the infrastructure gap, cut down the number of energy outages, power problems, transport, maritime ports, which are creating huge pressures on the economy, it will be very difficult to maintain 7% and above.
Yeah.
And so we need to figure out how to finance it differently. For far too long, it has been dependent on public funding from rich countries. And I think the fund you mentioned, Africa 50, the idea is to leverage the capital markets with transformational projects which enable us to keep making the progress we're making.
There is mounting discomfort that Africa is not getting enough out of its relationships with the Asian and Western economic powers. Thus, the bank insists that developed world mining and energy companies operating in Africa should pay more taxes to help the continent climb out of poverty.